What's up, everybody? My name is Jason, and welcome to Small Biz. It is Wednesday. Happy hump day to you, March the 15th, 2023. In today's video, I'm going to talk about how supposedly the entire banking system is going bankrupt, namely at the hands of Credit Suisse, which I've talked about repeatedly for more than a year. However, why the ECB, the European, that's all, folks, we don't edit around here, how the European Central Bank, or the ECB, in conjunction with the Federal Reserve, is about to draw a massive line in the sand and not only bring this bear market, which has been going on for 14 months, to a screeching halt, but touch off one of the biggest bull markets in the last 20 years. All that and more coming right up. Burn. I don't have my podcast thing today, ladies and gentlemen. I got my microphone. I tested that. But my keys are not working. My keys are not working. Ah, hell with it. Let's do something different. Right there. You see that? These are not working. It's not working. None of the buttons are working. We'll see if this is a train wreck. It may be. I can't see myself. So if you're new, welcome. We don't edit around here. We're shooting from the seat of our pants. By the way, it's almost noon, and as I'm talking to you, I'm noticing TRKA is ramping. It got down to 19.5. You saw me buy some more on Twitter at 1969, brought my average down to 22 and change. Right now, it's 21.5. So look, with the Dow down 510 at almost noon in the East Coast, and by the way, I am late for a meeting, so if I sound rushed through this, and if we don't get this out until 2:30, 3 o'clock, it is 11:56 to be exact, and we have TRKA on fire. Do not, and I repeat, do not chase this stock up at 22. You should have been buying it. You should be encouraged. You should have been buying it at 20 or less. So here's the deal. Before I go any further, and believe me, by the end of this video, at least some of you anyway, I will talk you off the ledge. We are about to see an end to this massive bear market that's lasted more than the 9.6 months that it usually is. We're going on 15. But not only is it going to come to an end, not only is the Fed and the ECB about to pull back half of their rate hikes by the end of this year, and you will not hear them say the word hike rates for years to come, but we are about to see a major bounce back. Wow, look at that stock, 22,223. I mean, come on. If that's not showing you life, that when the selling does end, TRKA at a minimum is going to do very, very well, but do not chase it. I would personally, and this is me talking, if you missed it at 19 and change, I'm putting my bids at 22.5. So 0.2001, which is slightly above 20, and no higher than 2051. Otherwise, leave it alone. We may get another sell-off or a retest of the lows tomorrow, but if you guys will cut me some slack, and I realize, what is it, XCLA at 044. Yeah, I'm long well over 1 million shares of stock, but I told everybody you could have gotten out of it north of 8 twice. So if you're still in it with me, you're getting your ass kicked. But I want everyone, as I said minutes ago, try to find a way to enjoy this moment. Do you realize that a bear market typically lasts 9.6 months? And if this ends on or before Memorial Day, which I've been saying repeatedly on Twitter, follow me at Try Small Biz, it'll be one of the longest bear markets in history. But we've actually had three bear markets in the last 5 years. 2018, the pandemic lows of March 2020, and now, which has me convinced, because as I just said a second ago, we are about to see the Fed, the ECB, the Bank of Japan, China, etc., do their last rate hike, perhaps for the rest of this decade. Oh, yes. Oh, yes. I am going to make a case on another video that home base on the 10-year is 2.5, in the middle of where we were for a decade at 0, and where we tried to go to 5, which is way too high. We can't afford to pay the interest on the debt alone. We cannot have duration risk in the banking system. They are going to have to cut rates down to around 2.5%, in my opinion, by the end of the year. The tips market is already calling for a full point. I say a quarter, 1.25 to a half. Half of the cuts, to keep it simple, stupid, by Christmas are gone. And I do not think for the next several years, yeah, I need a new chair. I do not think, that's a squeak, by the way, if you can hear it. I do not think that you're going to see the Fed increase rates for years. They're going to cut, depending on how bad the Credit Suisse problem is, at some point in the summer. Or if they don't, they're going to make it real clear in the Fed meeting in 10 days that inflation has peaked. Unemployment, Facebook just laid off another 10,000, is rising. Wage inflation is coming down. Those are the big three that they want to see. And while we are currently at 6%, but headed to 3% by the end of the year, while we are not at our mandate long-term of 2%, we obviously have a situation in the banking system that we need to address. And Jerome Powell, and I guarantee Mario Draghi, or whoever they have in charge over there now in the ECB, they've got bigger cojones than Jerome Powell does. Mario Draghi, if you remember back in the day in 2008, 9, etc., he was cutting like crazy. He was like 3 steps ahead of us because he had, I don't know, I think he's Italian. He had balls, and if he's not Italian, he's something along those lines. When they draw a line in the sand in the next week to 10 days, and they say, that's it, we're not raising rates anymore. We have to allow the banking system, the credit markets to adjust to the fact that we took rates up from 0. And if Jerome Powell is honest, he should look you right in the camera and say, we went too far. We didn't have any idea the impact that this was going to have in the credit system. Because all of these banks, including SIVB, and including the stocks that I told you not only to buy, but get out of. I said sell Wall at 35. And in particular, FRC, I said the bank run is done at 50. I said that yesterday. You could have made 5 times on your money if you played those. Now, is that part of our portfolio? No. Why not? Because I didn't have any money left. I'm all in with the rest of you, and I'll cover most of the stocks before the end of this video. But they're going to start cutting. And if Jerome is honest, he's going to say we went too far. And we're willing to let the situation in the banking system, which is not related to junk bonds, it's not related to toxic mortgages. They bought long duration maturities, in some cases 30-year bonds, which are supposed to be AAA rated. But because the value of the bonds tanked when rates went from 0 to, let's call it 5%, the net capital requirements of SIVB, even Schwab at some point, which was a total farce, First Republic, SBNY, etc., 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 their net capital went way down. That's what took my ass out of the business. I was part of a Southern California company that had mortgage-backed securities. Watch The Big Short or Margin Call. That was my life 15 years ago. And we had a run on our bank when Fidelity said, you need to mark, give us the real value of these securities right now, because we're not going to save your ass. We didn't have the net capital requirements, and they liquidated tens of millions of dollars. And even though I never touched that stuff, what sent me packing was options. More on that in another video. It wiped out our firm. And within a couple of months, we were out of business. And then I went on a string of selling my assets, my cars, my boat. I had, you think this watch was fancy? I had tons of jewelry. I had cash in every drawer of the house. But within a year, I was busted. I was on a forklift right up the road. I moved from Florida to here. And for $9 an hour, after my fiance said, fuck you, no buttons to bleep me out today, I was making $9 an hour loading Craftsman wrenches on a UPS truck. That is a true story. And that was the beginning of my life turning around. Taking responsibility for myself, and other than one single on a you-know-what in the last 15 years, I haven't gone anywhere near drugs. I occasionally drink too much. I own that, but a lot less than I used to. I live a good, clean, honest life. I'm working my ass off for $1 a day. Please consider getting a premium membership at trysmallbiz.com. I can't do this without you. And I'm here to tell you guys, and I could talk for an hour and a half. You need to listen to me carefully. The FUD that they're allowing to go viral right now to drown out me and what? The only other bull in the entire market, Tom Lee, last trade 21 on TRKA. You do not chase it any higher than 22.5. Is scaring people. You have a mobile banking world. And if they don't have someone like me who's tough as a fucking rock to say, settle down and hang in there, not only hang in there, but buy some TRKA with me in the 19s this morning. Hang in there with me with XELA. PBLA reports tomorrow. It's actually one of the only stocks up on the day. And you got to be impressed. Last trade on Hellbiz, 12.5. It's holding strong. We own it at 13 and small change. And while I'm on the subject, Sal, who owns half of the float at HLBZ, did give Yorkville another $50 million worth of paper. I could spend 20 minutes making the case it's for an acquisition. Whether it's Lime, BRDS, or both. There's going to be consolidation not only in banks, but in the mobility market, the e-scooter, the Green New Deal market. And HLBZ is about to have favorable earnings for the next 2 or 3 quarters because the sun is shining. We're about to get spring and summer, but let me just drill down on this point, and I'll try to get you out of here within 10 or 15 minutes. We just went through one of the most vicious 5-year periods in the last 100 years. We have had 3 bear markets. The average stock in NASDAQ is already down 63%. The stuff that we own, I am buying, and you're along with me for the ride, down 99.8% in the case of XELA, HLBZ, and TRKA. And in TRKA's case, last trade 21.5, do not pay more if you missed it in the 19s, than 22.5. We made money twice, 88% from its breakout at 13.5 on TRKA to $1. But nothing is sustainable. If you saw my tweets last night, nothing can sustain itself. The market's on very shaky territory. But I'm telling you now from experience of the last 30 years of living through 87, being in the weeds in 98, 2000, and 08, making an absolute fortune that got my ass out of bankruptcy, to build, what is it now, going on 3 or 4 houses and have a decent 6-figure life without any drug habit in sight. I am telling you, because it's been so bad for so long, for the last 5 years, thank you very much, Joe Biden. The next 5 years in a reversion to the mean are likely to be, and I'm going to touch on how AI, the maturation of AI, and the fact that you are about to see the Fed and the ECB do their last, if not already done, their last rate hike for years, maybe the rest of the decade. We spent 10 years at 0. We very well may spend the next 7 years somewhere in the middle. They are done, in my opinion, hiking rates for a very long time. And as I said the other day, we have 40-year lows in the M2, the money supply. They turned off the printing press in an attempt to get inflation down. But in the process of jacking rates up from 0 to, let's call it 5 on the 10-year, they created what's known as a duration risk in the bond market, i.e. banking system. These banks were not buying toxic derivatives like CS, one of the biggest blessings of all time. That's going to bottom the market. That's going to get the ECB and the Fed to stop raising rates. They're going to bail those Swiss, those Russian, those Chinese fat cats that got all their money at Credit Suisse out. This is it. This is the top of the 9th of the bear market. It is almost over. But what's to come? With the maturation of AI and a very easy Fed and global banking system for years to come, it's going to blow you away. The losses that we have right now, they're not guaranteed profits. We may have to take a realized hit, whether it's an XELA or BBIG, but the next 3 to 5 years, because the last 3 to 5 have been so bad, and we still managed to make over 100 winning trades in the last 12 months, and at one point it was 16x, now it's closer to 5, on your money. I know what I'm doing, and I'm telling you right now, if I'm right, and we're about to see the Fed and all the global banking system get in line and draw a massive line in the sand, and they say, that's it. We're pausing. And Jerome Powell, if you're listening in the press conference 10 days from now, you look us right in the eye and you say, ladies and gentlemen, we have a situation in the banking system. We did not realize the impact it would have on you, the American people, or worldwide, including Credit Suisse, going from 0 to 5%. So let me be clear. We are done raising rates. And while we are going to pause, which is most likely, not a cut yet, we stand at the ready with the ECB, the Bank of Japan, et cetera, to cut 50 to 100 basis points, if not more, in order to maintain not only 100% backstop of the banks, but solvency throughout the entire system. In other words, Jerome, you look people in the eye and you admit you made a mistake. You went too far, too fast, and you stand at the ready to turn on the printing press. And I know people like Peter Schiff, that guy's been screaming at you to buy to buy gold for 20 years. He missed the entire move out of the 2009 low. If you're listening to guys like him or even Jim Cramer, who finally blocked me, thank you very much, you're making a huge mistake. You need to be listening, whether it's to me or somebody else who realizes, holy shit, we've already had a whitewashing. We've already had a shellacking. We've already had the biggest, fastest rate hike cycle in history. We've already got money supply, M2 at a 40-year low. What comes after all that? Easy money, rate cuts, lines in the sand. 5-year bull markets and maybe longer where the Fed's going to be out of the picture. And then you add in AI. And by the new, we don't edit around here. If you're new, welcome. If I have a senior moment or I stutter like that's all, folks, like Porky Pig, because I'm excited. 2069 coming into the buy zone on TRKA. It's because I know with every ounce of my being, ladies and gentlemen, that this is it. The next week to 2 months tops between now and Memorial Day, it's it. And you're gonna look back. Mark my words. When they turn on the spigot and a TRKA is 30 cents in about 15 minutes flat, if not higher, you're gonna look back and you go, "Why the fuck was I watching CNN? Why was I listening to the fake news or all these bots that are designed $5 a pop to scare you by the hedge funds that are paying them to get you out of the market?" Do you realize that most of the chat rooms like StockTwits and even Discord are designed to scare you out of your stuff? Bill Ackman was on the news talking about, oh, the entire world's going to come to an end and the banking this and the banking that. I'll bet you that cocksucker was in buying WAL and FRC and Schwab and all the other ones that were flat on their back Monday. I want to see the insider trading on that son of a bitch. And he was probably blowing out of it before he had to do any sort of fancy filing yesterday when I said the run was done. A lot of these fudsters are trying to screw you out of your money, out of your position. They're trying to get you to panic. They're trying to get your TRKA under 20, which again, by the way, before I forget and have a senior moment, I'll be 53 April 13th. Real middle name Aries. Explains my personality, doesn't it? I'm an intense guy. I'm like a bull in the china shop. But you should know that I love you guys and I'm fighting on your behalf day and night. Do not make a mistake. Do not throw in the towel. Do not give up on yourself, me, or more importantly, your family. This is it. We are in the 9th inning of this madness. Do not wait for them to draw the line in the sand. Do not wait for Jerome to say, that's it, we're done. And we stand at the ready to cut. Do not wait, because as bad as the market has been and ARK right now is even, it's telling you, Cathie Wood stocks are telling you that growth, small caps, IWM, non-bank related assets are about to go up. When they turn this rate hike cycle off, I could go on forever. I could. I hope you can see This is it. Do not give up. Do not give in. This is it. This is it. In closing, bit emotional. This is March 2009. This is the long-term capital crisis. I can remember sitting at my desk in Florida thinking, what the hell is going on with this hedge fund named Long-Term Capital? And there comes Alan Greenspan. Well, we're going to cut rates and we're going to do this, that. It was like that. And while it did take 6 months after Lehman in 2008 to bottom in March 5th, I believe, of 2009, when we finally said that was it, it was like off to the races for years. The same thing is about to happen. We had 3 bear markets in 5 years. We're about to see the Fed and all the central banks stop cutting rates, perhaps for the rest of the decade, for the rest of the decade. They're going to sit in the middle of the range as long as they did at 0 for 10 years. Do not give up. Do not give in. In closing, TRKA, buy it 22.5. Sit at 2001, 2051. I've told you that before. Is it going to go back under 20? Maybe. But if it does, you get all over it. It won't last very long. ENSC last trade 57. It's a rock. And as I said the other day, tremendous story. There's a $10 price target out there on ENSC. I think it's from Roth Capital. PBLA has also got a price target that's between 7 and 10. They report earnings tomorrow. It's one of the only green stocks, PBLA, that I have on my screen. It's down 50% in the last few weeks on no bad news alone. I am telling you guys right now, as ugly and as bad as it not only has been in the last few weeks, but the last, let's be honest, 14 months of this clown that we have in office. And by the way, if you ever wondered why we went from 418 premium members to now 372, which is a 6-month low, is because half of those people that quit can't stand the fact that I call it like it is. They're hardcore Democrats that can't own up to the fact that Joe Biden is a fucking disaster. Donald Trump, imperfect. And I tore his ass apart when he appointed Javita Carranza. That's a whole nother story. But you know as well as I do, in the same fashion that I am right now and telling you to hang on or buy more of whatever you can. My favorites are TRKA, obviously. I got some in the 19s, and HLBZ and ENSC. Those are the 3 that if I had small cap money, I'm going into those. But Donald Trump would be out on the fucking White House lawn, standing there right now, every day with the red tie on saying, we're going to be fine. We're going to bring an end to this. We're going to get this. We're going to do that. You're going to be, now is the time to start your business. Now is the time to hang in there. Now is the time to expand. Now is the time never to give up. He'd be there every day, all day, standing there to the point of driving the fake news nuts to let everybody know, as he did when he handed the baton off to Joe Biden at record highs, inflation at 1.4%. I remember gas down the street at $1.69. He would be there as I am now, and he may be again, to remind you, never give up, never give in. This is an opportunity. Joe Biden, believe it or not, is the gift that is going to keep on giving. Because if you're buying in your mutual funds, your 401ks, or at a minimum, you say, I'm not going to give up. I'm not going to panic. I'm not going to give in to the fake news. This is going to come to an end. The Fed, the ECB, they're about to draw a line in the sand. And until next time, always remember that I love you guys with all my heart and soul. And I appreciate you watching. Now I got to go to a meeting. I'm late.